Welcome back, guys. Today we are going to discuss on cash budgets. Now, what exactly do you mean by a cash budget? See, in cash budget, we prepare receipts and payments on the basis of information given in the question, the projected receipts and projected payments, and based on the receipts and payments, the estimated balances at the end of each period would be known. Maybe if you're preparing for a quarter, you will be knowing what will be the cash balance at the end of each month. So one important thing you should keep in mind is this month closing balance will become next month opening balance. All right, guys, there's some disturbance. So this month closing balance will become next month's opening balance. Similarly, what is to be concentrated here in this case is we are not bothered of when you are making the sales, of which month expenses it is. We are only bothered when the money is coming in or when the money is actually going out. So this is like a cash basis of accounting, if you remember. So cash receipts and cash payments is what is our major concern. Suppose if I'm selling goods in this month, but I'm getting money in next month. See, January I'm selling the goods, February I'm receiving the amount. So January sales, I will not show the January receipt. Got it? So you can look at your document, 16th question. Actually, cash budget starts at 16th question. Now look at the 16th question. He's not asking you to prepare a budget as such, but only thing is the concept what I told you, like what is the receipt and what is the payment. Based on that, especially this is about payments he's asking. 16th question goes like this: the following expenses are incurred in a factory for the month of January and February. They are incurred, okay, in the particular year. So January and February wages, salaries and factory expenses are given. Calculate the budgeted cash outflows for the month of February, taking into account that. So he's asking you to tell him what will be the budgeted cash outflow for the month of February. Then why did he give the information about January? That will help us in a way. Let us understand the question. The first point says wages are paid at the beginning of next week. Now what do you mean by this? Now when you say weeks in a month, we generally have 4 weeks. So first week wages are paid in the beginning of second week. Second week wages are paid in the beginning of third week. Third week wages are paid in the beginning of fourth week. And fourth week wages are paid in the beginning of next week. That is nothing but next month's first week. Now if you look at this entire concept, in wages, out of 4 weeks, you will pay 3 weeks in this month only, and 1 week money you're paying in the next month. Now my point is, I don't want when you are paying. You tell me what you're paying in this month. So in a way, suppose if I take February 3 weeks wages I'll pay in February itself, and 1 week I'll pay it in March. Forget it. What else you pay in February? I'll pay 1 week's January's wages in this month. So it is something like this, guys. See, this is January, first week, second week, third week, fourth week. Then again February, first, second, third, fourth. So first week I'll pay it in the second week of January. Second I'll pay it in the third week of January. Third I'll pay in the fourth week of January. Fourth I'll pay in the first week of February. First week of February I'll pay in the second week of February. Second I'll pay in the third week of February. Third week I'll pay in the fourth week of February. Fourth I'll pay in the first week of March. Now when you look at this statement, what is paid in the February, if you understand, what is paid in the February, if you understand, the first, second, third week of February is paid in February, and the fourth week, January's, is also paid in February. So I can say 1/4 of January plus 3/4 of February will be paid in February, correct? This is what you need to understand to do this estimated or budgeted cash outflows. So let us see what he says for this. Question number 16. I'm talking about budgeted cash outflows. Budgeted cash outflows for February. Budgeted cash outflows for February. So there is no format as such because it is a typical question. The first payment he's talking about is wages. Now, how much you're going to take? I will take 3/4 of February's wages. What is 3/4 of February wages? 20,000 into 3/4. How much it is? 15,000. And 1/4 of last month's. Last month wages is given as 16,000. So 16,000 into 1/4. So this is 15 plus this is 4. In fact, you can make one more column. So I can say they're going to pay 19,000. This is amount in the column, auto column. Okay. Then, so did you understand? In February, the total wages was 20,000, but you are paying only for 3 weeks out of 4 weeks in February. And the 4th week, you are paying it in March. I don't want what you're paying in March. I want what you're paying in February. So January's last week wage we are paying in February. That is counted here. Then we are talking about the second kind of payment here, salaries. Now, when you look at salaries, it says salaries are paid at the beginning of next month. So it is understood like beginning of next month. So January's salary will be paid in February. February's salary will be paid in March. Now, what are you paying in February? What are you paying in February is important. What, not the February salary when you are paying. What you're paying in February is January's salary. So it is January's salary completely full. Everything is paid in the next month. So salaries are paid beginning of next month. January salary is 10,000. So straight away 10,000 I copy here. And similarly, factory expenses. So when you talk about factory expenses, when you look at the factory expenses, you see here what it says. Time lag in case of factory expenses, half month. So half month means half I'll pay in this month, half I'll pay in next month. So January, May, January's half will be paid in Jan, another half will be paid in Feb. February's half will be paid in Feb, another half will be paid in March. So what is paid in February? I'll pay half of January's and half of February's. I'll pay half of Jan's factory expenses and half of, so this is 14,000 into half. That is 7,000. And this month it is 16,000. 16,000 into half, it is 8,000. So it is 15,000 rupees. So totally 10, 20, 30, 40, 4,000 is your budgeted cash outflow. Yes. And for budgeted cash outflow. Therefore, budgeted cash outflow for the month of February is 44,000. Is it okay? So now what you have learned from this particular problem is February 20,000 is not a payment in February. The February salary 12,000 is not a payment here. The February factory expense 16,000 is not a payment here. What is a payment is different. Expense is different. Payment is different, right? So I hope this is clear. So let me proceed. Look at question number 17. It says a firm expects to have 30,000 in the bank on 1st May. 1980, very old problem, and requires you to prepare an estimate of cash position during 3 months, May to July 1980. The following information is supplied to you. Months, March, April, May, June, July. But look at the question is asking you only from for the months of May, June, and July. He's asking you to prepare a cash budget for May, June, and July. But he gave the information from March, April, extra months information is given, because you know March payment might be paid after 2 months or after 3 months. April payment might be paid after 2 months or after 3 months. So then that expense will come as a payment in these 3 months. So your headings are like the sales, purchases, wages, factory, office, selling expenses. Now, if you look at these 6 headings, only sales is one item where you get money, and rest of all headings you are basically talking about your payments. Purchases you need to pay, wages you need to pay, factory expenses you need to pay, office expenses you need to pay, selling expenses you need to pay. Other information says 25% of the sales is for cash, and remaining amount is collected in the month following that of sales. Now, the first and the foremost question you need to understand here is, it says 17th question. Try to understand this. The sales, 25% of the sales is for cash. So 25% of sales is for cash. All right. So what about the remaining 75%? The obvious 25% if it is cash sales, 75% is a credit sales. So 75% is credit sales, correct? Now he says, when you say cash sales, you get money immediately. But when you say credit sales, the problem is when you're going to get that money, you should tell me. Are you giving your customers a 1 month time? Are you giving your customers 2 months time? I don't know. So when the question says the remaining amount is collected in the month following that of sales. So if I make sales in this month, I'll collect it in the following month. So let me look at your sales figure. This is January. No, he gave the information from March. So March, April, May, June, and July. And he gave the sales. I will directly take 25% sales. 25% of 40,000. You know, March sales is 40,000. 25% is 10,000. So 75% sales is 30,000, because your total sales is 40. Correct? You can actually calculate the breakup for each month. 46,000. Sorry. 1/4. 11,500. References. 34,500. So it is 46,000. May sales are 50,000. So it is 12,500 and 37,500. So 50,000. June sales are 72,000. I think 72 is 18. So 18,000 is cash sales. Remaining 54,000 is credit sales. July total sales is 84. So 84, 24%, 24% is 21,000. 21,000. I think this is 63,000. Makes it 84,000. So I have bifurcated the total sales. I have bifurcated the total sales given in the question as 40, 46, 50, 72, and 84. I have taken the breakup. Now, what if I am considering these sales? These are the sales. Now I want the receipt. So 25% sales you will get in the same month. March 10,000 you will get in March itself. April 11,500 you get in April itself. May 12,500 you receive in May. June's 18,000 you receive in June. July's 21 you receive in July. No problem with the cash sales. What do you mean by cash sales? You give me cash, I'll give you goods. But what about the credit sales? The credit sales, this is cash sales. This is credit sales. All right. What about the credit sales? The question says the credit sales are collected in the month following that of sales. So this 30,000 you're going to get it in the month of April. This 34,000 you receive in May. This 37,500 you receive in June. This 54,000 you receive in July, and this 63,000 you may receive in August. So which 3 months I want? I want May, June, and July. So I will take this 34,500 and 37,500, 54,000 here, because I want the receipts of May, June, July. No doubt, this money is actually, this is the goods which is sold in April, but when are you receiving it? In the next month. So did you get this? So I am going to take 12.5. So you have to, you can either show it in the working or you can directly show it in your cash budget itself. So I'll take you to the cash budget straight away. Because I want you to understand the concept I have shown that working. Now once you've understood this, let's go to the solution part of it. 17th question. I'm preparing a cash budget. Now cash budget for how many months you're preparing? Cash budget we are preparing for 3 months. What are the 3 months? It is May, June, July. So I think it is May, June, and July. And look at the format. A cash budget generally will have A as the opening balance, then B, receipts. That would be heading. We have cash sales and collection from our customers, that is debtors. Okay, then probably you will just take the total here, total of A and B, that is total receipts. You can close it here. Then you go with C, that is payments. As of now, we have not come to any payments. So let us first, if you look at the question, he says a firm expects to have 30,000 balance on 1st May. So May opening balance, they are expecting 30,000. What about June and July, sir? That is what we are trying to find out. So opening balance expected on May 1st is given to you. June and July you have to say. Now talking about receipts, cash sales. I told you that in the workings what we have done earlier, it is 25% of this respective month. So 25% of May sales. You go to May sales, so it is 12,500. 25% of June sales, 72,000. 25% is 18,000. And 25% of 84,000, that is 21,000. These are the cash sales. What about collections from debtors? Like I will take 75% of previous month. So 75% of the previous month. I think what is the previous month for May? The previous month is April. So April sales is 46,000. In that 75% is credit sales, that is 34,500. What is the previous month for June? It is May. May sales is 50,000. 75% of 50,000 is credit sales, which we will receive in June. 37,500. May sales is 50,000, sorry. May sales is 50,000. In that 75%. Yeah, 37,500. Correct. What about July? You will receive credit sales made in June. What is the June sales? The total sales of June is 72,000. In that 75% is credit sales, 54,000. That you will receive in July. So I will write it for your understanding here. 25% of same month. 25% of the same month. This is 75% of 1 month old sales. Is 1 month old sales. So 75% of 1 month old sales is this, 25% of the same month. So 25% of May, 25% of June, 25% of July. Then 75% of April, 75% of May, 75% of June. All right. That will give you the receipts. Come to the payments. Now, what are the payments you have? You have purchases, so you have to pay to creditors. Wages, factory expenses, office expenses, selling expenses. Second point of the question, other information says, suppliers supply goods at 2 months credit. So collections from debtors, this is payment to creditors. Payment to creditors. Now, how much time creditors are giving to you? Suppliers means your suppliers of raw material, that is your creditors. They are giving 2 months credit. Now, how much is cash purchase and cash sale? You didn't, credit sale, credit purchase and cash purchase, you didn't tell me, as you said it in case of sales. Here you did not tell me that 25% is purchased on cash basis or otherwise. So I assume that all the purchases are on credit basis only. So now when you say 2 months credit, whatever I purchase in March, I will pay it not in March and April, but I'll pay it in May. So what I purchased in March is 24,000. I am writing it in the month of May. What will I pay in June? 2 months old. What I purchased in April is 28,000. So April 28,000 I will pay in June. May 32,000 I'll pay it in July. So I'm writing a hint for you. It is 2 months old purchases. It is 2 months old purchases. Is it okay? Because why am I saying 2 months old purchase? Because you told me that your suppliers are giving 2 months time to you. Then delay in payment of wages and all other expenses 1 month. So delay in payment of wages. So payment of wages, I can simply write here it is 1 month old. 1 month old. All other expenses also same. So I can say factory expenses, same, 1 month old. Office expenses, same, 1 month old. Selling expenses, same, 1 month old. So all these 4 items which are given in the question, for May, I will take the previous month because April expenses are paid in May. So April wages is 6,500, which is paid in May. April factory expense is 3,500, which is paid in May. April office expense is 4,000, which is paid in May. April selling expense is 3,500, which is paid in May. Same logic is applied for June. What is the previous month for June? I will look at May. The May's wages is 6,500. I paid in June. May's factory expense is 4,000 that I paid in June. May's office expense is 4,000 and May's selling expense also 4,000. All this I'm paying in June. What you'll pay in July? Obviously, what is there for June? So June's wages is 7,000. I'll pay it in July. June's of factory expense is 4,400. I'll pay it in July. June's office expense is 4,000 and selling expense is also 4,000, which I'm paying it in July. Hope you understood this. So, like it is 1 month old. For May, it is 1 month old. For June, it is 1 month old. For July, it is 1 month old. And the third point says, that is overdone, income tax of 10,000 is due to be paid in July. So there is another payment you are planning to pay, income tax. When are you planning to pay? In the month of July. So nothing in the month of May, nothing in the month of June. I will only pay 10,000 rupees in July. So this 10,000 straight away goes to July. And last, purchase preference share dividend of 10% on 1 lakh to be paid in May. So there is one more payment, preference dividend that has to be paid. I just put it down. Preference dividend is 10% on 1 lakh, that is 10,000 rupees should be paid in the month of May. So I'll take only in the month of May, nothing in the month of June and July. So this is what you have to do. That is all about the question. So come back to the question here. Solution. You gave me the opening balance, the receipts and the payments are in front of me. So A plus B, you can just add this. In fact, you can take a total here and say this is total payments. This is your total receipts, including opening balance. This is total payments. Total receipts and total payments. Now, I just want the totals of this. I'll take the help of calculator. So this is 30,000 plus 12,500 plus 34,500. This is 77,000 is the total. It's 24,000, 6,500, 3,500, 4,000, 3,500, and 10,000. Gives me 51,500. So guys, what you have to do is you cannot do it simultaneously like what we have done so far. You have to do month-wise. Opening balance plus receipts is so total 77,000 minus total payments is 51,500. So the closing balance, I'll further put it down here because I want you to see this. B is nothing but closing balance, which is nothing but A plus B minus C. A, opening balance, what you have, 30,000 plus B, the receipts, total 77,000 minus C. So 30,000 I had plus another some amounts I received for sales. So total 77,000 I have, and I'm planning to pay 51,500. So difference 77,000 minus 51,500 gives me 25,500 will be in hand at the end of the first month, that is May. Is it okay? Now this closing balance of May will become the opening balance for next month. This is very important. This will become the opening balance for June. May's closing balance will become the opening balance of June. Then you can continue. This plus receipts, that is 25,500 plus 18,000 plus 37,500 gives me 81,000 is the total. And this total is 28,000 plus 6,500 plus 4,000 plus 4,000 plus 4,000 gives me 46,500. 46,500. So I have just taken that above and now I'm writing 46,500 is this. So 81,000 minus 46,500 gives me 34,500. Where do you take this 34,500? This 34,500 will become the opening balance for July. This is June's, right? June closing balance will become July's opening balance. So this again, so 34,500 plus 21,000 plus 54,000 gives me 1,09,500. You get the payments. 32,000, 7,000, 4,400, 4,000 plus 4,000 plus 10,000. It is 61,400. So it is 1,09,500 minus this gives me 48,100. So my closing balance at the end of each month is there in front of me. That is 25,500 is as per the cash book, as per the answer, but 35,000 is this. I think I went somewhere wrong. This is 5 plus 5, okay. This is 500. So let me check the figures because the answer says 35,000 and 48,600. Where did I miss that 500? 25,500 is brought here. 18 plus 37,500 is good. 28,065. This is for June, right? So I should look at May. 65,444. 65,444. I think according to me it is 34,500. Please check the totals and confirm it once. Okay. Now, what is the cash budget? You have understood. Opening balance of first month will be given and you will try to find out the closing balance of that month, which will become the opening balance of next month, and it goes on like this. Is it okay, guys? Okay, that's all for today. Thank you.